How banks treat you at every level of wealth. $0 to $30 million. Money doesn't just change what you can buy, it can change how financial institutions treat you. As your wealth grows, your relationship with banks often moves from being a simple customer relationship to a highly personalized financial partnership. Here's how that journey can look, from having almost nothing in your account to controlling a $30 million fortune. $0 to $1,000. You are mostly a basic customer. At this level, the bank primarily sees you as a retail customer. Your biggest concerns are usually opening an account, receiving your salary, using an ATM, paying bills, and avoiding unnecessary fees. You may receive automated offers for credit cards, small personal loans, or overdraft facilities. The bank service is generally standardized because your financial relationship generates relatively little revenue for the institution. Your credit history becomes particularly important. A strong repayment record can help you qualify for better financial products later. $1,000 to $10,000. The bank starts looking at your behavior. Once you maintain regular balances and consistent income, the bank has more information about your financial behavior. You might become eligible for higher credit card limits, personal loans, vehicle loans, or pre-approved offers. However, the treatment is still largely automated. The bank cares less about your total wealth and more about factors such as income, credit score, account activity, debt, and repayment history. $10,000 to $100,000. Better products begin appearing. At this stage, you may start receiving more attractive offers. Depending on the country and bank, you could qualify for premium banking accounts, relationship managers, better service channels, or reduced fees. The bank may begin asking about your investment goals because deposits are no longer the only opportunity. It can potentially earn money from investments, loans, insurance, brokerage services, and other financial. $100,000 to $1 million. You become a valuable client. Crossing into six-figure assets can significantly change your banking experience, although the exact threshold varies by institution. You may qualify for priority banking or similar programs. Instead of dealing entirely with automated systems, you may receive access to a dedicated relationship manager. The bank may discuss investments, mortgages, tax-efficient structures, insurance, retirement planning, and portfolio management. But remember, priority does not mean the bank works for free. Banks make money from financial products and services, so customers should always understand fees, commissions, interest rates, and conflicts of interest. $1 to $5 million. Private banking enters the picture. With several $1 million in investable assets, you may qualify for private banking at many institutions. The relationship becomes much more personalized. Instead of simply asking, "What account do you need?" the bank may ask, "What are you trying to accomplish with your wealth?" You might receive customized lending solutions, portfolio management, estate planning coordination, access to alternative investments, and more sophisticated credit facilities. A wealthy client may also be able to borrow against investments rather than selling them, depending on the bank and circumstances. $5 to $10 million. Your wealth becomes a relationship. At this level, banks can view you as a major long-term client. You may have a team rather than a single banker, a relationship manager, investment specialist, lending specialist, and other professionals. The bank may provide customized financing for property purchases, businesses, or other large assets. However, wealth also creates complexity. Asset protection, taxation, succession planning, liquidity, and investment risk become increasingly important. $10 to $20 million. Institutional-level attention. With $10 million or more in investable wealth, your financial life can start resembling a small institution. Banks may offer highly customized investment strategies and financing arrangements. You may gain access to specialized investment opportunities that are not designed for ordinary retail customers, subject to eligibility requirements and local regulations. At this point, the question is no longer simply how much money you have. Banks may care about where the money came from, how it is structured, what assets you own, and what risks are involved. Compliance and due diligence checks can actually become more extensive because large transactions attract greater regulatory scrutiny. $20 to $30 million. You can become a major private banking client. Around $20 to $30 million, depending on the institution, you may be among a bank's most valuable individual clients. The bank may build a highly customized relationship around your financial goals. You could have access to sophisticated lending, investment management, estate planning coordination, and specialized services. But there is an important misconception. Having $30 million does not mean every bank will automatically treat you like royalty. Banks compete for profitable clients, and wealthy customers can negotiate. But they also face strict regulations involving identity verification, taxation, source of funds, anti-money laundering rules, and reporting requirements. The real lesson. The biggest difference between $0 and $30 million is not simply the size of your bank balance. At lower wealth levels, you primarily use the bank's products. At moderate wealth levels, the bank begins customizing products around you. At high wealth levels, the bank may build an entire financial relationship around your needs. But wealthy people still need to be careful. A private banker is not automatically a fiduciary, and a sophisticated financial product is not automatically a good investment. The smartest approach at every level is the same. Understand the fees, compare institutions, protect your liquidity, diversify your assets, and never confuse excellent service with good financial advice. In the end, money can change how much attention a bank gives you, but financial knowledge determines how effectively you can use that attention.